Hey everyone, Joe Blodek today for the Bank of Canada interest rate announcement. It's just happening in a few minutes here, and I'll be sharing with you live here on Canadian Mortgage Weekly, episode 190, with the results to the interest rate announcement this morning. It's highly anticipated. A lot of my clients have been asking me about where interest rates are going, and they could go down or they could stay the same. And we'll talk about what are the reasons behind that and some of the results. We'll also talk about what it means for your mortgage and how you can plan effectively with the mortgage you have for the future of your mortgage plan, and make sure that you pay the least amount of interest as possible. Now, we also have our sidekick interest rate on our program today. We have her. She predicted the interest rates earlier today. I took a video and I wanted to add her to the video here and just show you the video so you can watch it for yourself. So while I upload that, I'm going to be talking about what we think interest rates are going to do today. And with that, a lot of news outlets have been saying that rates are to stay.
Guys, we got interest rate here today. She's really excited. What's she gonna eat? Lettuce for rates going down. Hay for lettuce for rates staying the same, or pebbles for rates going up. All right, let's see what you got here. What do you want?
All right, so
you want anything?
Trying to
what are you
figure
gonna
what
eat
she wants.
today?
You want the hay?
Do you want the hay, or do you want the lettuce, or do you want the pebbles?
Let's see what she wants.
Oh, wow. She went for the lettuce this morning, guys. Well, that's it. That's her prediction. Back to the podcast, and looking forward to finishing the podcast up. See you later, interest rate.
All right, so that is my girl there. Her name is Interest Rate, and I like to have her on the program to essentially predict the interest rates going forward. I would like to say that she's been right most of the time. Well, let's see if she's right today. In about 1 minute, we'll have the Bank of Canada release the interest rates here in a moment. And like I said, a lot of news outlets this morning predicting that the first rate decision of 2026 will be to keep rates where they are, expected to hold steady. If you look online and read all these interesting and extremely moving news articles about interest rates, they're talking about interest rates staying the same, political uncertainty, and the upcoming renegotiations of CUSMA. They want to keep things status quo going into these negotiations. So they don't want to rock the boat too much. We also have a U.S. Fed rate decision coming up here as well. But, regardless of that, we want to know what the Bank of Canada is doing today. And they're going to release that just in a moment here. And once we get that here, we're going to release it right here on Canadian Mortgage Weekly Live. And I'll talk about exactly what these interest rates mean for your mortgage. We'll talk specifically about, variable rate mortgages and home equity lines of credit. One of the main reasons that I do this here is to help mortgage holders in Canada plan their mortgage. And with prime rate right now at 4.45%, it'd be great if we could have that go down a bit. But let's take a look what the Bank of Canada decided. We have an announcement here, guys. All right. Looks like the Bank of Canada did maintain its policy rate this morning. There's no change in interest rates. So it's a pretty uneventful morning, as some people would call it, a nothing burger. But with no change also means that interest rates are not going up. And as much as, I hate to say it, but my guinea pig was right again. And I can't believe it. She's missed, I think, only one or two in all the episodes she's been on. So her name is Interest Rate, and I think she's predicted, I think, 10 out of the last 12 announcements. So good on her. But yes, the Bank of Canada has maintained its policy rate. That means that prime rate will actually stay at 4.45% this morning, going into the next rate decision. And the next rate decision will be March 18th. So we are just a little bit under 2 months away from the next rate decision, but 4.45% will be the next interest rate announcement. So we have some time. That's not going to do much for the housing market. It's not going to do much to boost it because rates will stay the same. Prime rate of 4.45%. Now, with prime rate of 4.45%, I'm seeing a lot of home equity lines of credit hovering around prime plus 0.2 or prime plus 0.5. And if you have a home equity line of credit, you're not going to see any changes on your home equity line of credit today. You're not going to see any change in minimum payments. All those interest rates are going to stay the same. It's going to be pretty status quo for you going into the next month and a half until we have that next rate announcement in March. So good news there because rates aren't going up. If you were hoping that rates were going down today, so that's a little bit of a bad news situation today, but we could possibly see rates go down next time. It's all going to depend on what will happen in March, right? And with the political climate, what's happening in Canada. I think personally Canada should reduce rates. It would be really good for the economy. It would really help the housing market recover from where we're at right now. I know a lot of clients that, their mortgages have crept up a little bit higher over top of what their homes are worth right now with the home prices softening in Canada. Anyhow, that's what's going on there. Some updates for you, just that the Bank of Canada released this morning. Bank of Canada is expecting global growth to average around 3% over the projected horizon. The Bank of Canada also released that there are U.S. trade restrictions that are continuing to bring uncertainty into the market. The Bank of Canada also released that CPI inflation in Canada picked up in December to 2.4%. And, that's not great. Inflation was 2.1% in 2025 overall. And the Bank of Canada is expecting that to stay in the 2% target. And if you ever think about what the Bank of Canada is expecting for inflation, they always expect it to stay around 2%. That is their target. So if they're around 2%, if inflation is over 2%, we're not going to see rates coming down really, unless inflation is trending down pretty heavily. And if inflation is under 2%, conversely, we'll see the interest rates typically rise in those cases to lower in those cases to help bring inflation back into target. So thanks everyone for tuning in today. Prime rate remains at 4.45%. We're not going to see any movement on that this time around. Join me next time in March for another episode of Canadian Mortgage Weekly on March 18th on Wednesday at 9:30 a.m. And yeah, if you have any comments or questions, leave them below. I'll try to answer all of them on my platforms. And if you have any personal mortgage questions, feel free to reach out via email or on social media through direct message. And I'll try to answer your questions that way. And we can get you guys, get some mortgage advice to you. I'm a mortgage broker working in Ontario, and I can help you with your mortgage that way. And yeah, as I said today, Bank of Canada's announcement came out. No change in variable rate mortgages, no change in home equity lines of credit. And if you have a fixed rate mortgage, there's no change there at all until your term is up.